Over 80% of new investors lose money in their first year, not because they're dumb, but because no one warns them about these 5 mistakes. Let's change that today. Hey there, I'm Hada, and if you're just starting out with investing, this video could literally save you thousands of dollars. Today, we're diving into the 5 most common and costly investing mistakes beginners make in 2025. I'll explain each one with examples, show you the real cost, and give you a super simple fix to stay ahead. Stick around till the end, because mistake number 5 is the silent killer of wealth most people don't even realize they're making. Let's start with the classic mistake, chasing hype. You see a stock going up 200% on social media, or crypto influencers pushing the next Bitcoin. It feels exciting. You don't want to miss out. But here's what really happens. By the time you hear about it, the early investors are already cashing out. And guess who's left holding the bag? You. Example. A Reddit thread hyped up a penny stock last year. My cousin poured $1,500 in without understanding a thing. 2 weeks later, it crashed 80%. He panicked and sold at a loss of $200. Cost. FOMO investing turns your money into someone else's exit plan. Fix. Research before you invest. Understand the company, the product, and the risks. If you wouldn't invest without social media, don't invest because of it. This next mistake can silently destroy your entire portfolio. Ever heard the saying, don't put all your eggs in one basket? It's investing 101, but many beginners still go all in on one stock or sector. Take Emma. She was all in on tech stocks in early 2022. When the sector dipped, her portfolio was cut in half overnight. Cost. No matter how good a stock seems, any single asset can fail. Even blue-chip companies have bad years. Fix. Diversify. Use ETFs or index funds like VTI or SPY. These spread your money across hundreds of companies, giving you broad exposure and reducing risk. This is one I made myself, multiple times. You buy a stock because everyone's talking about it. You feel like a genius when it goes up, then panic when it drops and sell too soon. Let's look at 2020. The market tanked in March. A lot of beginners sold out of fear, but those who held saw the fastest recovery in history. Cost. Acting on emotion means buying high and selling low, the exact opposite of what you should do. Fix. Build a long-term mindset. Automate your investments. Turn off the noise. And remember, the market doesn't reward emotion, it rewards consistency. Most YouTubers won't mention this next point, but it's draining your money every single year. Fees may seem small, but over decades, they add up to huge losses. Example, let's say you invest $10,000 for 30 years at 7% returns. If you pay a 1% fee, you'll lose over $75,000 to fees alone. That's like handing over an entire car, maybe even a house, just because you didn't pay attention to expense ratios or trading fees. Fix. Choose low-cost index funds. Vanguard and Fidelity have great options with expense ratios as low as 0.03%. And don't trade too often. Commissions and spreads add up. Remember, the less you pay, the more you keep. Timing the market feels smart. Wait for the dip, then invest. But here's the truth. No one, not even the pros, can do this consistently. Example, if you missed just the 10 best days in the stock market over the past 20 years, your returns would have been cut in half. Fix. Use dollar cost averaging. That means investing a fixed amount every month. Some months you buy high, some low, but over time, it averages out and removes emotion. I wish someone had drilled this into me when I first started. Let's quickly recap. Avoid chasing hype. Invest based on research, not rumors. Diversify to protect yourself from single stock risk. Don't let emotions drive your decisions. Watch out for hidden fees. They eat away your returns. Don't time the market. Instead, invest consistently with dollar cost averaging. If you get these right, you're already miles ahead of most beginners. If you're serious about building long-term wealth the smart way, avoid these traps and subscribe to this channel right now. Next week, I'm breaking down index funds, what they are, how they work, and why they're perfect for beginners. Hit the bell icon so you don't miss it.